Let us cover 5 disadvantages of systematic investment plan in this video today. First disadvantage of SIP is improper asset allocation. Let us see this with an example. So in this example, there is a total 50 lakh rupees available with an investor, and he decided to invest into mutual funds, and to his disadvantage he just chose to invest only 30,000 rupees, but he kept it invested for 2 years period, and let us see what happened. In the next 2 years, his 30,000 rupees has grown to 60,000 in mutual fund portfolio, and the total has increased money from 50 lakhs to 50.3 lakhs, which is a minuscule 0.6% increase in the overall net worth, despite the fact that he has got 100% return in a 2-year period. So then what exactly an investor like this should do? He should be actually investing into mutual funds based on his risk profile, an appropriate amount of his overall assets, which can be 25, 30% or 40% or whatever, based on his risk profile. The second disadvantage is SIPs will not be able to eliminate the risk of fund managers' exit. Let us say you are invested in a fund house, a well-performing fund house, and your CIO of that fund house is also performing well. But one fine morning, he just tendered his resignation. The key question is, should you continue to invest? The only way you can actually survive such a scenario in your financial journey of investments with these mutual funds is if you are able to track the fund managers and are able to see which are the fund houses which are having stable tenure of CIOs, and then choose the funds accordingly. Third disadvantage of SIPs is they will not be able to eliminate the risk of poor selection of funds. Let us see how a typical investor will choose his funds based on the historical returns. So here we have taken 2016 calendar year and tabulated the results for large cap funds from January 2016 to December 2016. Just make a note of these funds, and we also tabulated the worst performing funds in the large cap category. And now let us see what happened after 1 year, and we'll use the same methodology to tabulate the best and the worst returns. In 2017, the best return funds and the top 5, only one fund was common between 2016 and 2017, which is JM Core, which by the way is a very rare instance. But if you can see and observe that the worst case returns list, the worst performer, none of them are actually repeated from 2016 to 17. Therefore, all the mediocre performing funds, or it can so happen sometimes that the top performing funds can become a worst performing fund for the next year. Therefore, the key question again is what one should do in 2018 if you have to invest your fresh money, where you should be putting this money. The only way which we can actually recommend here is to have a formal fund selection process which can help you to choose funds based on your risk profile, market situation, and consider other market factors as well, just instead of just based on a historical return. Fourth disadvantage of SIPs are they may not always outperform a lump sum investment. Let us see this with an example. So in this example, a person has invested 10 lakh rupees in the month of January. This is a lump sum investment which he has done, and the Nifty level has gone up from 9,100 odd to 11,000 till in the month of August. So what has happened is, if you do a lump sum investment, this is going to perform much better than an SIP investment if you do a monthly investment, say in the month of January, February, March, June, July and August. What will happen is your average purchase price will go up. You can refer to my previous video of advantages of SIP, where we have shown that the average value can come down of investments if you are doing investments in a volatile market. So, but then obviously this is not always possible for most of us to predict that when the markets are going to run up in a linear fashion, then being volatile or being sideways. So what is to be done? We have to choose our timing of investments into markets in two ways, in SIP and in lump sum. So some part of the money should go on a regular basis, and sometime we should be able to put money in a lump sum in the markets. Most of us believe that if we have put SIP, we are assured of positive returns on our investments. But that is where the fifth and the final disadvantage of SIP is that one cannot expect to completely remove the impact or the negative impact of market volatility. Even if you have invested for 2-year period, it can so happen that the returns on your investments are near zero or slightly negative. If you have invested for 2-year period, say from starting from Feb 2007 when the Nifty was at around 4187 and it has crashed in Jan 2008 to 3683. Even though you have invested on a per month basis every year for the next 2-year period, that is till May 2009, you will see that the Nifty is still at 3683, which is a difference of nearly 504 points. That means we are not able to see any positive return even though we have done in a disciplined manner SIPs on a per month basis. Therefore, one has to be ready to accept this fact that even though a volatile market SIPs can help us in a volatile market to reduce the average purchase price, but it can so happen that even after 2 years of investment time horizon, we may see slightly negative or near zero returns. So the only way to actually overcome this is to have a longer investment time horizon of at least 7-year period, of 5 to 7-year period and more, 10-year even better. So one will be able to make use of the market volatility in his own favor to get the reduced purchase price and also get better returns in the long run. So today we have covered 5 disadvantages of SIP. If you have any queries regarding this or any doubts or questions, please feel free to comment on the bottom. We'll love to hear from you, and thanks for watching.